Let's take a look at the S&P 500 as we get ready to trade October week 3. We're already on monthly OPEX for October since we had that October 1st on Friday. So that kind of blew an entire week of October just with one day. Already at monthly OPEX. And here's what the intraday action looked like on Friday. When last I tweeted to you on Friday just before 12 o'clock Eastern, we were still sitting inside the initial balance period and then kind of fell out of that, made a new low of the day, breaking below the 20-day simple moving average, tried to pull it back in this nice little rally in the afternoon, but then that rolled over. And as you can see, we sold off at the end of the day on Friday and closed the week out below the 20-day and below the initial balance low on a higher low of the day against the one that kind of fell out in the middle of the day, but still a weekly close below the 20-day simple moving average, and we were really looking for that to close above it. When we look at the roadmap, you can see what happened on Thursday, that we had this nice rally and gave more than half of the day's range back and closed just a hair under the 20-day and then just completely failed on Friday. So as we go into monthly OPEX, we have a couple of choices here. Either this is just going to be the pause that refreshes after 3 green days, and we come out of the gate strong on Monday, taking out the 50-day simple moving average and going after our monthly all-time set price that happened in September. Last month's OPEX was a new all-time high monthly set at 44.64 and change. So either we're going to spend the week working our way towards this, which means taking back that 20-day, taking back that 50-day, and getting back to settle monthly OPEX up here or maybe even higher. Or we're going to come out of the gate flat and still flounder around in here inside this range that happened on this big day on Thursday, holding open this gap, and then maybe later in the week taking that move towards the monthly all-time high settlement price. Or we're just going to come out of the gate weak, fill this gap to last Wednesday's close, and break this combination of the 10 and 100-day simple moving average. So this is another bearish cross coming our way, and it could mean the straw that just sort of breaks the market's back and we just fall. However, it's happening because of a rising 100-day simple moving average, and really you need to have both the averages falling in order for it to really be truly a bearish cross. But at any rate, if we do fall down and break both the 10 and the 100-day simple moving averages, we're going to be just below everything, and there really isn't much to hold us up because this October low that we've set so far really doesn't mean anything anyways. It really didn't backtest very close to this July low. It didn't solve the October low on ES, which would take us all the way down here to 42.70 if we're still holding a 10-point spread, maybe a little lower. If it's a bigger spread, maybe not quite as low. It doesn't even get us down to that 6% range at 42.75, 6% sell-off, from the all-time high that we've been trying to duplicate that happened back earlier in the year. And like I said, it really doesn't get us anywhere near back testing this big swing low that we saw in July. So I really don't see any reason why this would hold, and a break of the 10 and the 100-day simple moving average could have us falling all the way down here if this 42.70 and this resolution of this October low with ES isn't enough to feed the beast. Then I think we at least come down here to test the July low. This whole area from 42.50 on down to the July low at 42.33.13. That would be the next target if this stuff doesn't hold here. And moving on to the more backed out daily chart, you can see that if this stuff doesn't hold, if we can't hold a back test of the July low, then we could really careen down the canyon here, all the way back to the 200-day simple moving average and test the June low. Maybe that might make a lot of sense because here we are heading into the final quarter of, well, not heading into, we are into the final quarter of the year. And maybe the market is looking for a complete pullback all the way to where we were, back at the midpoint of the year in June. Test and hold above that June low. Test and hold above the 200-day simple moving average. Down at 41.64 or so, we would be 400 and almost 400 points off of the all-time high. That would be pretty much close to a 10% correction down there too from off of this high. I bet you that would be a really fantastic place to get long for a nice rally to end out the year. So we'll see how that all works out next week. Are we going to go on up higher and try to resolve and make a new monthly all-time high settlement and just keep on going from there, and our rally has already started to end the year? Are we going to kind of sit sideways and then make a move later in the week, or are we just going to get it going first thing on Monday? Those are my thoughts on that. You really need to check the data. I'm not going to waste a lot of time on the video. I made an extremely long video last weekend, and I think that people just are sick of watching those long videos. So I will leave it up to you to check out the data and see when the days are that we're going to get hit with data that might move the market. That might give you a clue. If there's something big that's going to hit on Monday, maybe that's going to move the market around 10 o'clock a.m. As we get into Monday's trading. Could be a very thin volume day too, because it's Columbus Day, Indigenous Peoples Day. So, it might be some thin volume with a lot of people taking off, and sometimes we get sort of outsized moves on that thin volume. It might get a big sell-off, might get a big rally. Who knows? We'll see. Anyway, I hope you enjoyed this video. Hope it helped you out, gave you an idea of where we are at and where we're going. As always, good luck and good trading.